Good afternoon, everybody. Welcome back to CPA and Consultants. As every week, here we are with our CPA, Fulton Abraham Sanchez. Hi, Fulton. Welcome back.
Thank you, Monica.
Thank you. For the new ones in our channel, this is a video series called Tax Talk, where we are going to talk about the different tax strategies that you must follow according to your situation. And we will answer all the questions we have received via the social media or emails or comments you may leave in here in the description or in the comments of our YouTube channel. And today we are going to talk about the letters from the IRS. And due to the number of existing letters, we have divided this video into 3 parts. So please be tuned because we have 3 chapters. So Fulton, shall we start?
Yes, certainly.
Perfect. Here we have the first part of this chapter. CP88, Delinquent Return Refund Hold. What is that letter?
Okay. The series of letters that the IRS sends, basically, they treat or they deal with a specific issue. In particular, letter CP88, Delinquent Return Refund Hold. This letter is letting the taxpayer know that the hold is that the refund has been held, that the IRS is not giving you the refund because there is a return that needs to be filed. This is why I say CP88. Where do you find this number, CP88? At the beginning of each letter, when you receive, they are in the right hand side, at the top of the letter, right corner, there are some specific codes. The first one is the letter code, the number of the CP88. Then you have the year. Then you have the tax ID. Then you have a fax number and the time when you can file. Maybe even a fax number, phone number and fax number where you can call or you can fax. Those are the data. I'm sorry, and also the year, the fiscal year that the letter is identified or is attached to. Once you identify all this, the first line, the first in the right top corner, the first line is the code of the letter. It will appear there CP88 or CP or whatever the type of the letter. So CP88 is a letter that gets you, or you get the letter because there is a return that has not been filed. This could be in a previous year because there is no determination. If you have a debt, meaning that you owe money in the previous year, refund for the current year of tax filed. Therefore, to fix this, you need to file a tax return for the year before the one that you are claiming the refund. If you don't file your refund, you don't file your tax return for that year, could be a year before, it could be 2 years before the year that you are filing, the refund is going to be on hold. This is because the IRS cannot determine if there is a debt or if there is a refund for that year. So this is not an alarming letter. It only lets you know that there is a return missing in your account and you need to file that return for that particular year. That's it.
Okay, got it. And the next letter is CP14, First Notice of Balance Due.
Okay. Usually letters CP, they go for levels. Whenever, and you need to read the letter, what the letter is about. Or because I said before, all the letters are not that frightening. Some letters are just information, like you need to file a return, you need to provide more information, that's it. But some letters, whenever you see first notice, then you have to be careful. Because CP14 is a letter that it's telling you that you owe money, that you filed a return, but you didn't pay the money due in your return. And this happens This happens, for example, when we have a client, or there is a client who he or she doesn't want to pay with a bank account, and he said, I will send a payment, or I will pay by the IRS.gov site directly to the IRS, and the client forgets, or the client doesn't remember to pay. When that happens, the IRS will send you a letter stating you owe money. This letter is not a problem, because you can do two things. You can pay the balance due, or you can do an installment agreement. These are the two options that you have. When you receive letter CP14, first notice of balance due, you have two options: either to pay the balance due with a check. The letter will get a slip, payment slip. You will cut it off, put it in an envelope, put your check, and put in a stamp in the envelope, and it will go automatically. You don't need even to put on it. No, you need to put in a stamp, by the way. Yes, you need to put in a stamp. But you don't have to write an envelope. You don't have to write the address. It will come on payment slip. Or you will do an installment agreement. Even an installment agreement, you can call the IRS and do the installment agreement by yourself. One. Second, you can also go to irs.gov and set up an account and do the installment agreement by yourself. That will be the options. If you don't want to do an installment agreement either with the IRS or by yourself, you can go to an accountant or an attorney, tax attorney, or an enrolled agent, and your enrolled agent will be able to do it for you. But the thing is, whenever you are receiving this is not a problematic letter. It will become a problem if you do not pay, because the letter, as I said before, is not a problem in itself. The only problem is that it will bring penalties and interest for the payments not done. The balance due has not been paid. The taxes balance due has been paid, and because of that, you are going to have interest to pay in the letter. Meaning, if you owe whatever the amount you owe, it will not be that amount only. You will have interest now. So it's critical that you do something when you receive this letter, because this is the first letter. There are two more if you don't pay. There are two more, and the fourth one is the letter for leaving your assets. They are kidnapping your assets. So at this point, you are still good. You only need to do two things: either pay the amount of the debt and the interest, whatever is in the letter, or second, do one installment agreement. So when you're going to do an installment agreement, it all depends how much you owe. If you owe less than $25,000, the IRS will allow you to do an installment agreement either by phone, by the internet, or when an accountant do it for you, and you don't have to pay with direct debits. If you owe more than 25 up to 50,000, you are obligated to do an installment agreement if you prefer to do that, but it must be automatic debit for your bank account. That's absolutely. If it is over $50,000, you do not only need to pay with a bank account, meaning with an automatic debit. In addition, you need to provide a detailed description of your income and expenses, your assets and liability, to determine the amount that the IRS will accept. When you owe more than 50,000, the IRS is not going to accept the amount that you plan. The IRS is going to require you a minimum amount, and that's the amount that you have to pay. Now, remember, whenever you are facing this problem of a balance due, the best is to pay in 1 year, because when the next year comes, that debt is already paid. This is if you have the means. If you are broke, meaning that you have nothing, you are not able to pay, you have two more options. You can apply for an offer in compromise. I have said this in other videos, or you can apply for economic calamity, meaning that when the first one is when you are completely broke, bankruptcy, or broke, meaning that you cannot face serve your debt. The IRS will give you a long questionnaire to do an offer in compromise. Now, whenever you are contemplating these options, offer in compromise and economic calamity, do not do this by yourself, because the IRS, when you call the IRS and say, I want to do an offer in compromise, the IRS will will not do it outright. The IRS will try to force you, or will try to, not to force you, but will suggest to do an installment agreement. And then we'll send you papers that you will sign. The moment that you sign, you're gone. There's nothing to do because you signed. So before signing any paper, before doing anything, just talk to a professional, an attorney, a CPA, or an enrolled agent experienced in solving issues with IRS, because your financial resources are on the line. In addition, for example, if you are able to come with the full fund, with the whole amount in the next 6 months, the IRS will even giving you an installment agreement, like to suspend the payment for the 6 months, and then in 6 months you can pay the full amount. Obviously, it will accumulate interest. So be very careful. Remember, we sometimes clients ask, how can I prevent running into trouble with the IRS? The root of all problems is not paying your debt on time. That's a root. So this letter is the root of all the problems. But actually, the root of all problem is when you are doing your tax return and you are not paying your debt there, or you are not doing an installment agreement there. So be very careful. This letter, you can even receive this. You can receive this letter even if you establish an installment agreement, because, as I said before in other videos, the installment agreement doesn't run automatically when you're filing with your tax return. It takes 3 months. So you file your tax return, you file an installment agreement, and you receive this letter. So what happened? You will call your accountant and say you did something wrong. No, the IRS doesn't validate installment agreements immediately. It takes 90 days. So within those 90 days, you need to submit payments through the online system of the IRS, or by writing a check and sending to the place where you file your tax return. You have to ask that information to your accountant. If you don't, the easiest way is to pay it within those 3 months that the installment agreement is validated. Pay that online, irs.gov/payments. We'll put that link here in the video description, irs.gov/payments. You can pay there with the code 1040, 1040C, 1048, 1040, and the year of the tax return. And then you put the amount, and you pay that with credit card or with debit card. And you have to do this at least for 3 months until the installment agreement kicks in. Even now, you receive this letter, you file an installment agreement. Even if you file an installment agreement, you have to do payments monthly till the installment agreement kicks in. If you chose direct debit, if you didn't choose by the direct debit, you have to keep doing the payments and honor the installment agreement till the installment agreement is exhausted and you have paid your debt. Always keep this in mind, that the IRS doesn't automatically set up the installment agreement. You need to do payment. You need to be proactive. You have to do payments in 90 days until the installment agreement is accepted.
Perfect, thank you. And we have here the third letter, which is CP501, reminder notice, balance due.
Okay, this is the series of letters 501, 503, 504, and 5. They go, when you go from a lower denomination like 14, CP14, to a higher denomination, 501, your problems are running. And you cannot run the IRS out. You cannot outrun the IRS. This is when things has not been taken care of. For whatever the reason is, even for fear, at this point, the second letter, when you get letter 501, letter starting number 5, this is when you have to be careful, because letter with this denomination, 501, 502, 503, 504, this is when the IRS start to dig in. They want to receive the payment, and you are not complying with your obligation. So this is a reminder only, but at this point, you should not receive a reminder. You are supposed to fix it the moment that you receive the letter. Now, you can also receive this reminder, letter CP501. Remember, CP501, where do I find that? At the beginning of the letter, top right hand side, there is the first line is the code, CP and the number of the letter. The first line, top right. Then you see the letter, type, the tax ID, the year, the name of the officer, or the telephone number, and to whom reply. It will give you the instruction and the year of the tax return of the case. So if you receive this might be a consequence of you filing a tax return on the first note. I'm sorry, filing an installment agreement on the first notice, but not doing the payment. So you file an installment agreement. You say, I am off the hook. I'm fine. I don't have to worry. And boom, you receive this error. Well, the only thing that you forgot, even though you file your installment agreement, is even if you file an installment agreement and you requested automatic debits, remember, the IRS does not process immediately. It takes 90 days. So you file an installment agreement, you requested debits from your account, automatic debits, and then you receive this letter. Well, I already took care of this. What happened? The problem is that within the next 90 days after you file the installment agreement with automatic debits, you need to do payments through the irs.gov/payments website, because the installment agreement doesn't kick in immediately. So you have set up your installment agreement. So you set up your installment agreement. You didn't choose automatic debits. So if you didn't choose automatic debits, you have to start doing payments either by check, as you agreed upon, the number of payments. How you do an installment agreement? You divide the number of the amount that you owe, divide it into 12, and you pay that plus a little bit at the end of the period, because you're gonna have interest. The IRS is gonna send you a letter how much you owe anyway. So you put that amount in installment agreement. You send the letter. Now you didn't choose any automatic debit. You start doing payments by check, and then you send it to the IRS to request your accountant. Where do I have to send this? Usually is where you file the tax return, the location where the tax return is received by the IRS. There are specific centers according to the geographical areas that we have in the US. So you request that, you send a check, you write a check, and you put your social security number on the check, and you give it to the IRS cash a check, and then fine, you do that through the number of the months where you have agreed to pay the tax debt. Remember, 12 months is just a suggestion. Doesn't mean that you have to do it in that time. It could be you have up to 72 months to pay. But remember, 72 months probably will duplicate the debt, because it's over 5 years. It will probably duplicate, perhaps not duplicate the debt. It will be 50% more of debt that you are going to pay because of interest. So you set up your installment agreement. You send payments monthly basis, and the IRS send you. You set up your installment agreement. You didn't request any payments deductible from the account. The IRS sent you a letter because you forgot to send payment. So you start sending payments by check, or you go to the irs.gov/payments and you pay there. That's one. Second, you set up your installment agreement and you even request automatic debit from your account and say, I am off the hook, fine. Boom, you receive this letter. You forgot to do payments for the next 90 days because the installment agreement is not set up automatically. So now you have to send two options: either go to the irs.gov/payments and do payments there, the amount that you selected, that you put on the installment agreement, amount of the debt divided into 12 months, that amount you pay monthly, that amount you put on the irs.gov payments, irs.gov/payments, and you send your payment, or you write a check. Remember, whenever you set up an installment agreement, either with automatic debit or without automatic debits, you have to do the payment. When there is automatic debits, 90 days. When there is no automatic debits, for the rest of the time of the period that you have agreed to pay your debt. Where you do your payments, you have to request to your accountant to process your return where is the location that your tax return is received by the IRS. With that information, you write a check and you send it by mail. Or if you don't want to ask your accountant the number where to send the payment, you go to irs.gov/payment and pay there directly. You do that in a monthly basis if you have an agreement without automatic debit, or for the next 90 days until the installment agreement kicks in by debiting automatically from your bank account when you have chosen that option. So please keep all these details. Remember all these details because they are very important. At this point, if you have not you received this letter, CP01, reminder notice, balance due, is because either you didn't do, you did nothing, or you did something, but you forgot that the IRS, that's something as an installment agreement, and you forgot that the IRS doesn't process the installment agreement for the next 90 days. So keep all that in mind.
Got it. And then I received, for instance, CP503, second request notice balance due.
Remember that this is like an elevator.
Yes.
The higher it goes,
the most difficult.
The more dangerous the fall. So 503 is getting serious. This is when you have not done your job, your homework. You have not provided the installment agreement or paid your debt. So at this point, recommendation is the same as with letter 501. Do something. Get with a professional to do. Or B, if at this point you are not able to pay, then talk to a professional and consider an offering compromise to pay a portion of the debt. Third, if you are completely broke on the street, you cannot support yourself, you are living with a relative or with one of your children, and they are supporting you, you receive no income, you have no job, and you can prove this to the IRS will put the debt for 10 years frozen. It will be in standby, frozen for 10 years. It will be because of economic calamity. Doubts as to collection is called the technical term, doubts as to collection. So it's doubtful that the debt will be collected because of the economic situation, economic calamity of the debt of the taxpayer. The debt is frozen for 10 years. Within those 10 years, you are supposed to receive no income. Within those years, you are in the same situation, the debt will be forgiven after 10 years. But you have to apply for forgiveness at the end of 10 years. So there are options. You need to get informed. Talk to a professional, a CPA, a tax attorney, or enrolled agent, versed, experience in tax debt resolution to give you the best options. So remember, do something, get informed. If you call the IRS, write down every single detail, like the name of the person, the code, the IRS code, the officer will provide you, and address them in a respectful way, like they are police officer. But do something, either talk to a professional, talk to the IRS, find your options. If you are in bankruptcy, meaning that you are not able to, technical bankruptcy, meaning not able to comply with your debts, consider an offering compromise to pay a portion of the debt. If you are broke, practically on the streets, then consider what is called doubts to collection, and it will be 10 years frozen your debt, and at the end of 10 years, it will be forgiven if you have no income during those 10 years, but do something.
Understood. And it seems like this person likes danger, and this person receives the letter CP504, final notice,
Okay.
and IRS intends to.
This is what I keep saying. Now is really Now it's really dangerous. Now it's trouble because this is a final notice and the IRS is going to kidnap your assets. Letter CP504 is perhaps the last hope that you have. At this point, you are still in time doing an arrangement with the IRS. But at this point, you will be in a weak position. You will not be able to negotiate because the IRS has all the power, has given you 90 days. These letters like 501, 503, 504, they are every 30 days. So the IRS has given you 90 days that you have done anything. At this point, the only thing that you have is, if you are broke, obviously offering compromise. Tell the IRS, I cannot pay my debts. I have no money. I have no job. They are going to ask you, how long you've been this for? 1 year, for 6 months? Okay, this is what you're going to do. They're going to say, you have two options. You can pay, you can do an installment agreement, or you can do an offering compromise. And they're going to send you the 2 sets of documents. And they're going to say, sign this, sign that, whatever you agree. Problem is that you are not familiar with the document. So you can talk to the IRS, but never agree to sign anything. They are not gonna force you to the telephone, by the telephone to pay anything. There is no jail for debts. For this type of, when the personal debts and you don't pay your debt tax debt, there's no jail. It can be a consequence in your credit report, because the IRS is going to look into your credit report and they're going to post to your credit report because you owe money. But then do something, get something out of this. Do not stay quiet. You have this final notice, you have to do something. So you call the IRS, you tell them always the truth, that you have no money. And if you tell them that you are that broke, like broke in the streets, like you are living with a relative and you have no income and that relative provides you roof and food, then they will say you might be able to apply for the doubtful collection or economic calamity. But they will give you another set of documents, because it's a different set of documents for each one, for an installment agreement, for an offering compromise, for economic calamity or doubtful collection. It's a different set of documents. So you might have 2 or 3 set of documents. You don't know what to decide. So at that point, it will be better you talk to a professional, or you talk to a non-profit organization that they have. Some churches have these non-profit organizations to help clients to deal with this tax debt. So talk to someone, get the advice that you need to proceed, but do something at this point. Because if you do not do something, the IRS is going to kidnap your bank accounts. If the bank accounts do not satisfy the debt, it will be then a lien on your property. The IRS is not going to sell it. It cannot force you to sell the property to pay your debts. The IRS can force you, for example, to liquidate your retirement account, like IRA accounts. 401ks, no, because they are exempt. But IRA, the IRA accounts or Roth IRAs, they will be, they are enforceable by the IRS to be liquidated to pay the debt. So be very careful saying I don't have debt, because the IRS knows all this from advance, because you have filed all that before. And every single institution that holds your accounts, IRAs, Roth IRAs, 401k, they report to the IRS electronically. So the IRS has all information from all your information is there, your bank accounts, everything. So that's how the IRS knows when you have money and when you don't have money. So don't lie, because the IRS will say, no, you have this and you have that. We have proof of that. So be very careful. But so you agree with, you call the IRS, you tell them the truth that I have no money. But remember, at this point, this letter gets to you because you have done nothing. You have not called the IRS, or you have not found out. You have run out of the IRS debt, like run from it. But you have not done anything. So the IRS can kidnap your bank accounts if that is not enough. It can put a lien on your property, and then when you sell it, the first thing to be paid is the the lien with the IRS, the taxes that you owe with the IRS. And remember, if this is after many years, if they will accumulate, and probably the amount of the debt, depending on the amount, was going to take a considerable impact on the amount that you're going to receive when you sell the house. So be very careful when you do this. So don't procrastinate in fixing this. The other thing that the IRS can do is to put a garnish on your salary. It's a garnishment. So the IRS will force your employer to withhold 10% of your salary and send it to the IRS on a monthly basis automatically. So all these measures that the IRS takes is with the objective of guaranteeing that the payment for the debt is going to be received.
Got it. And from floor CP504, we jump to floor CP523, intend to terminate your installment agreement and seize your assets.
Yes, this is related to an installment agreement. So CP523 is still bad because here you did have an installment agreement, but you didn't honor it. This happens once the IRS has approved your installment agreement and you have forgotten to do the payments because you opted for, or you chose for a manual payment, meaning that you were sending the checks. This is not going to happen when you have automatic debit. Well, this might happen when you have an automatic debit and there are no funds in the account. So the installment agreement, you have not honored the installment agreement because you didn't send the checks by mail, or you didn't have enough money in the bank account, or for any reason the account was closed and you forgot to update the IRS or send a new installment agreement, and talk to the IRS about, call the IRS about the change of accounts, and now the installment agreement it's going to be terminated. It's an intent. It means that it's not terminated. It means that it's going to be terminated if you don't do anything. But if it is terminated, the IRS is going to seize your asset, meaning kidnap your bank accounts, garnish your salary, and set a levy on your property. These three could be one. This could be one at the same time if the amount is that large that neither your bank accounts and the 10% of your salary is enough to cover the debt. So finally the IRS needs to place a lien on your property because it's not enough. So at this point, you need to reinstate your installment agreement. But at that point, the IRS is going to have is going to require automatic debit if you didn't have it before, and is going to request as well financial information. So don't get to this, because at this point the IRS can increase the amount that you owe because now you're at risk. You don't honor your obligation. So the IRS now is going to give you, or is going to ask, to request a larger amount for payments.
Understood. Well, this was the first chapter about IRS letter.
It's better to be, whatever you do it with the, whatever you say,
exactly.
whatever you compromise with the IRS,
honor it.
Promise, do it, because the IRS, this is not that somebody else is sitting behind a computer checking who is doing or who is not doing what it's supposed to do. This is automatic system that they send all these letters automatically, and they execute you automatically as well.
Exactly. Please, everybody, you already know, please, this first chapter about this, we have reviewed 6 letters. I mean, these are the most, the nicest ones. So please act, as our CPA Fulton has said, please, you should act, please. Yeah. So thank you everybody for joining us. And of course, as always, thank you, Fulton, for sharing this vital information that can really save a lot of time and money. So please follow the steps. And if you have further doubts, please do not hesitate to contact us. You can send us an email. You have had the email address here, or also you can leave a comment. And in the meantime, you can also check the webinars we have done about offering compromise, letters from the IRS, step-by-step, and installment agreement. Before leaving, please double check if you have already subscribed to our YouTube channel, so you can be notified when we publish the next chapter of the letter from the IRS that, trust us, you want to know more about it. So see you soon, and thank you very much, Fulton.
Yeah.
Bye-bye.
Bye.